Good morning, traders and investors. Happy Friday, everyone. Roger Scott here, senior strategist for The Trading Pub. It's Friday. It's December 15th. I'm still living my life in February 10th of 2023. I don't know why February, but I'm still thinking February. Time is just moving too fast for me. I protest. It's about 7:37 in the morning. The market's going to gear up to open up in an hour and 53 minutes, to be specific with you. As you can see here, prior to the open, the Nasdaq is up about 55, which is a little right on the fringe of being non-random. The Dow futures are up about 100, also right on the fringe of being non-random. I wouldn't get too hot and bothered about these numbers, because with the volatility we're seeing in the market and with the levels we've been hitting, it's not unexpected to see prices move so much. I mean, look at the volatility we've been seeing. Let me just show you here. That's a lot of movement here, a lot of movement. It was pretty quiet here, but it dragged up a little bit here. Now, before I get too deep into my levels and all the other stuff that I'm going to be talking about, I want to remind you, please, please, please subscribe to our YouTube channel so you can get these videos and alert right when I bring them out. They happen at about 8:30. Go to YouTube, go to the search function, go to Roger-Scott in the YouTube channel. You'll find them there. Subscribe to our Telegram. Go to rogerscott.com/Telegram or look below this video, and come to my VIP room. It doesn't cost you anything. Till Christmas time, till New Year's, I may start charging like I did before. The link is below this video. Do not miss out. And comment. I want to hear you guys comment. All right, let's get into all the good stuff. So you could see here, this is the S&P 500. Yesterday, we made a swing high. The all-time high is just a little bit up from here. You could see those levels. Let me just pop those levels for you. And we haven't reached those levels in quite a while. We're right here. We're at right below, just to give you a perspective, that level. Now, I drew this yesterday. I drew this before we went up to this level, but notice we got stuck literally at the level where I drew this resistance level. So there's going to be two things that are going to happen. We're going to break through this resistance level today, and we're going to try to test the swing high, the all-time high. If that happens, we're going to have a lot of volatility and a lot of momentum. The second case that'll happen is we're going to huff and puff, sucker a bunch of longs in the morning, and then start coming down. Now, here's the thing. Typically, I don't like to trend counter trend, and I'm not going to start now. But this is a bit too much, and there's not really a lot of catalyst. My perspective is this. I think the market's going to do one of two things, okay? So I'll tell you exactly what I think. I think scenario number one, the market stays between these two levels right here and consolidates. You know, maybe comes a little off, but basically stays in this range right here for the next week or two, and then starts making a higher high. Something like this. Pow. You know, breaking down a little bit. Looks like it's going to break down. Squeeze some, trap some traders here to the short who think we're going to break down, and then come back up. Which means we're going to consolidate and chop around for the next week or two. In my opinion, that's the most likely scenario. Why? Well, we already have all the data from the Fed. Everything is priced into the market. There's really nothing that's new here that we don't know. Earnings are behind us, and there's really no major catalysts right now. And I think the market is going to, hedge funds and mutual funds are going to play catch up to this rally and try to catch up so they can outperform the market before the end of the year. Remember, and this is something I explained to folks yesterday, and I'm going to repeat it for you guys again today. It's very counterintuitive, but professional hedge funds and institutional traders, very large institutional traders, they don't care about performance. They care about outperforming the index. If the index is down 50% for the year, and if they're down 45% for the year, they're a winner. If the index is up 50% for the year and they're up 55% for the year, they're a winner. It doesn't matter what they do as long as they outperform the index. That's all their job is. So they're not really concerned about giving you guys a lot of money. They're just trying to outperform the index. If they see a rally in the index like this in February, they're going to do everything possible to try to front run it or try to come in so they can buy stocks to outperform this index, which is one of a lot of the stocks around this area have been breaking out, because they're playing catch up with lagging stocks. They don't want to buy stocks here. They want to buy stocks here, which is why I've been recommending it. But here's the thing. The market's already quite up, and I think they're going to keep chewing it, and they're going to start absorbing all of this right here, and that's going to take a little time. So my scenario number one is that we're going to just jive around here and not really do a lot, which will create a very low probability trading environment, maybe some good day trading environment, but not a really good swing trading environment because the market's not going to have a lot of swings. That's scenario number one. Scenario number two is we huff and puff here and we break out and we make a new high. Well, the problem is if we make a new high, there's a lot of resistance over here. And I think the market will bounce back here anyway. So scenario one is we chop around from these levels, maybe go a little higher and then come back and chop around. And scenario two, we break higher and then come back and chop around. But I'm not seeing sustainability of the market just going straight up like this parabolically. Folks, this is the S&P 500. This isn't a small cap stock. So I'd love, and again, I have no idea what's going to happen. I'm just basing what I'm saying on 30 years of experience. In January, in 3 weeks, in 2.5 weeks, it'll be 30 years that I've been doing this. And from my experience, the markets don't just go straight up. Even here, notice they consolidate a little bit. Even here, they consolidate a little bit. And this is when the Fed is saying, we're done, we're done, we're done, we're done. So this is really, really a big catalyst. But again, everything is priced in. We're at very key levels. We bounced off. We hit this target yesterday perfectly. Look at this, 472.61, 472.37, less than half a point. So now the question is, are we going to consolidate in this range or are we going to break out higher? And we don't know, but neither of those scenarios give us a really high probability opportunity to trade right now because there's not much room here. And if we go sideways, there's not a lot of range. So you have to be really carefully and you have to pick stocks that stand on their own. Now, the bond market cleared the 200-day moving average. If it goes higher next couple of days, we'll find out if this is for real or if this is a trap. If this is a trap, then today we're going to undo much of what we did yesterday and start coming back into the 200-day moving average or below the 200-day moving average. And I don't know what's going to happen. I'm just showing you the possibilities. Volume is really high, and we do have good sustainability. You've got industrial production today at 9:15. It's not at 8:30 report like usual, but it does start before the market opens. You've got PMI flash at 9:45. Please, please, please don't go doing anything before 10 a.m. It's not a good idea. Now, let's talk a little bit about the broad market and what we can expect next, global economy, and then I'll talk about sectors. Dovish signal from the Federal Reserve will also looking ahead to release of U.S. business activity. That's today. That's 9:15. Number of Americans filing for jobless claims is completely, it's been 200,000 average, hasn't really gone anywhere. There's now I'm holding my breath, I'm trying not to have a heart attack. There's now 68.5% of a 0.25 basis point rate cut in March, and the Fed is now pricing in 3 interest rate drops next year. Don't get me started. I think maybe May earliest, June, May, but not March, But again, and if I'm right, it's going to be a nice little correction. The rug is going to be tugged nicely under from the market. Industrial production data will come out today. Europe giving us a little tailwind. 5th week of gains. This is what I'm saying. It's too much, folks. It's just too much. Gains in energy and mining stocks are leading the overall market higher. China closed lower after latest data affirmed patchy economic recovery, underscoring the necessity for more stimulus. They're still in deep doo-doo. Their industrial production growth exceeded expectations, but retail sales rose slower than expected. Japan, close higher. There's a smell of this negative interest rate environment going away, and that would be really good for their economy. The yen pulled back from a 4.5-month high. Costco, up over 1%. Let's just see how Costco's doing right now. I like Costco. Oops, wrong ticker symbol as usual. Let's take a look. Oh, it's up nicely, 647. I know people were talking about this yesterday, but folks, it's got a big range. You got to give it a little room. Nice earnings, nice little shakeout there. Let's continue. Leonard Home down 3%. They were doing really good. I don't know why they're down. I mean, this lower interest rate environment is amazing for them. Stronger than expected results. Very interesting. Let's take a quick look here. Very interesting. Well, they did go up almost 10%. This is nothing. This is what I'm saying. When you see something like this and it looks big, look at the chart. If you look at the chart, I mean, this thing is just right in the middle. It could fill the gap, but again, Everything has gone parabolic right now. So this is a very, very dangerous market environment. Very dangerous market environment. Looking at sectors, you could see very hard to determine sectors. And I'm going to tell you another thing. It's very difficult to pick stocks that are outperforming the market when the market is outperforming everything and just doing this. When the market's steady, it's easy. When the market's up, it's easy to find bearish stocks like Walmart right now. Really bearish. But when the market's going straight up, it's very difficult. Look, every sector is rocking and rolling. Every one. So how do you find which sector is bullish or bearish? Well, you got to go to the strongest one. The strongest sector right now, and I'd like to know what the strongest sector right now is. Home builders and retail interest rates. Home builders, retail, consumer demand, real estate, and Russell 2000 small caps. Folks, this is an environment, this is a very, right now, at least right now from last night, I don't know about going forward, right now, very interest rate sensitive environment where stocks that do well in a lower interest rate environment are rocking and rolling. Home builders, that's why I recommended Builder yesterday, or the day before yesterday. Look at Builder. Whoops. I don't know what's wrong with me today. I just can't type. Gave you guys Builder yesterday. Or we closed it out yesterday, sorry. Again, I'm just running into things. We closed it out right here. We didn't catch the whole move, but we got some of it. But again, folks, be really, really cautious right now. Russell 2000, let's look at IWM. All right, let's take a quick look here. That's the level that I drew a long time ago. I drew this level, folks, back in a year and a half ago. And we're finally breaking above that level. If this is a real breakout, give it some room. This could be a real breakout. But right now with this move right here, be cautious. We can come back down. And the big test is this. ARK, Kathy Woods. She's also coming through. You see that? That's bullish. That's really, really bullish. And I told you guys about this back in a year and a half ago. I said nothing good's going to happen till we break out. We're finally breaking out. Is this real or not? Not sure, but things are definitely moving in the right direction. Look, even the lows here are getting higher or somewhat higher. But I like what I'm seeing here. Definitely, definitely, definitely bullish. Folks, interest rate sensitive stocks are really doing well right now. Home builders, retail, small caps, technology, semiconductors, that's where you want to focus on. Be careful, be careful, be careful. We're doing great, but one hiccup can erase a lot of profits from the last couple of weeks. And also, stop thinking you're a market wizard because you did really good in the last 5 trades. The market's been going straight up. Don't get FOMO. FOMO, fear of missing out, is what kills traders. Don't get fear of missing out right now. Before I let you, and by the way, if you have any questions about anything I said at all, need confirmation, send me an email or post comment below this video. I will respond and others will benefit. Or roger@rogerscott.com. All of this info is below the video in the YouTube channel. Now, many traders dive into stock purchases without being clued in on their profit dates, the profit dates. This often leaves the vulnerable and caught off guard when the stock hits a downward spiral, seemingly out of the blue. Ever found yourself in a pickle like this, holding a stock that seemed solid, only watch its value plummet for no apparent reason? Chances are you've been caught up in this phenomena. However, there's a twist to this tale. Oh yeah. By pinpointing these crucial profit dates, you can shift the odds in your favor, just like Vegas does against you. And with a bit of savvy timing, you could turn the tables. Keen to learn how to identify these pivotal profit dates on stocks? Just hit the link below for a deep dive. And have a great weekend. Remember, roger@rogerscott.com if you need anything. I'm going to be traveling today, but I'll be around. I'll be around most of the day. Bye, guys.